Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds to 9 o'clock, including news New Zealand is becoming an IMF favourite. But first, US Federal Reserve Board members were unanimous in wanting to ditch the thresholds they'd been using to telegraph policy changes. That's according to the minutes of last month's meeting. Those minutes shed little new light on what might prompt interest rate rises, however, so perhaps US rate rises are not as close as markets had expected. Equities took off higher on the news. Oil and gold rose. US Treasury 10-year benchmark yield was up, but only back to 2.71%. Greece, who was at risk of crashing out of the Eurozone just 2 years ago, will issue its first sovereign bonds in almost 4 years later tonight. They're trying to send a strong political and economic signal that is on the way out of its debt crisis. In China, there was a sign of how committed they are to bringing in new financial market reforms. The People's Bank of China has hired Deutsche Bank's top China economist as its own chief economist, and he says he has a 3-year roadmap to make it more like the US Fed. There'll be a lot of internal opposition to overcome first, I would think. In a new report released overnight by the IMF, New Zealand is far and away in the best shape of the 25 advanced nations surveyed for gross public financing needs over the next 3 years. The IMF says we will have the biggest surplus by 2016 and the least need for new debt on a percent of GDP basis. New Zealand dollar flirted with 87 US cents late yesterday and fell back slightly overnight, but it pushed on up again when the US Fed minutes were released and is now at 86.8 US cents, and the Aussie is at 92.7 Australian cents. And the TWI is now at 80.5, all similar levels to where they were this time yesterday morning. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.